morning, everyone. We will start the morning call. Uh, on Friday, the US markets managed to post good gains. At the end of the week, the Nasdaq was up almost 3.8%, while the Dow Jones was up 1.5%. Asian markets have opened with a positive bias. They are marginally up today morning. Crude oil remains around the $110 mark since last few days. And on the domestic front, the rupee has been declining. On Friday, we saw it touching a fresh lifetime low of 77.55 against the dollar. As inflation concerns and strength of the US dollar continue to weigh down on the rupee. Also, the 10-year bond yield continues to increase gradually, and currently it is at 7.32%. I will now hand over the call to the technical team.
Thank you, Jehan. Good morning, all of you. Looking towards the Asian market, we are likely to open on a flattish note, and we might see some range bound or sideways trading session during a day. Technically, we are Nifty is trading in the pattern of slow top, slow bottoms, which indicates a potential downside. But at the current level, Nifty has immediate support at around 15,720 levels. If it fails that level, hold to fails that level, then we are likely to witness some more selling pressure, which might drag a Nifty towards 15,670 to 15,600 levels on the downside. Whereas on high side, 15,840, 15,870 are the crucial resistance level. If it manages to clear that level on the higher basis, then the pullback rally can be witnessed, which might take a Nifty towards 15,970 to 16,070 levels on the higher sides. The overall view will remain a cautious, but the pullback rally cannot be denied if the Nifty manages to hold these mentioned support levels. Coming towards the Bank Nifty, Friday we have seen a huge sell-off into the Bank Nifty also, but we might see some bounce back in the today's session if Bank Nifty manages to hold 33,000 psychological mark. If Nifty maintains that level, then on the higher side, the first resistance will be placed, or we can say the pullback rally likely to be seen towards 33,400 to 33,800 levels on the higher side. Whereas on the downside, first immediate support is placed at 33,000. Below that level, 32,840 levels can be seen on the lower side. The overall view will remain a cautious. Pullback rally can be seen into the market after a huge sell-off, but just hold your long positions, or if you want to create a long position, but maintain with the strict stop losses. Coming towards the Nifty Finance for today intraday purpose, the first resistance is placed at 15,340 and 15,550 levels. Whereas on the downside, 40,920 and 14,770 is the crucial support levels for Nifty Finance. I think that's it from my end. I requested that you guys take a call forward.
Yeah, thank you, Swati. See, on the derivative front, yes, we have seen some good amount of selling pressure, but now two things are going for a bounce from here. The PCROI that has been in the oversold zone from quite some time continues to remain low. Also, the open interest continues to remain low. The PCR at the 16,000 strike is above one still, even though we are around the 15,800 odd mark. So it does tell us that some amount of bounce can probably come in from current levels. So probably today can be a good day for the markets, where we might witness a good 200 to 50 points rise from current levels. So definitely, maybe in the first half an hour there can be some soft opening and some selling, but after that, we might just witness some bounce coming in. So look out for the bounce. Good amount of support is placed around the 15,700 odd levels. From the stock specific front, auto stocks did pretty well on Friday, and they will continue to move up very likely. M&M is doing very well out of the auto pack, and even Hero Motor. So both these stocks are likely to witness some bounce in today's trading session. A good long built up has been seen. Even Sun Pharma has seen good open interest addition and long positions. So look out for the same as well. Sun Pharma is likely to make a move upwards. Banks have been under tremendous selling pressure, and looks like some more pressure can come in the first half an hour, 1 hour, but then they might witness some bounce back soon. So look out for the same as well. That's it from my side. I'd like to ask the fundamental team to take over, please.
Yeah. On the results front, DB Corp result has declined both on revenue and margins, so one can avoid. Nazara Technologies has posted below expected result, majorly on profitability front due to EBITDA margin coming at 8.5% versus expectation of 13.8%. Tech Mahindra posted inline set of numbers for the quarter with constant currency quarter-on-quarter growth of 5.4% versus expectation of 5.2%. The TCV for the quarter came at $1010 million dollars, while for FY22 it is at $3279 million dollars, which is up 48% year on year. EBIT margin came at 13.2%, which is lower quarter on quarter. Supply side challenges, higher amortization due to acquisition are some of the reasons which led to the lower margin. For FY23, management indicates focusing on having organic revenue growth with improvement in margin. And they have also indicated that the deal pipeline is strong. So higher utilization plus higher pricing power, better business mix should lead to higher margin. On the negative side, supply side pressure, travel expenses are some of the headwinds on the margin front. Wage hike will happen from July onwards, and overall the outlook is positive from long-term perspective. Amber Enterprises result is below expectation. Revenue was 10% below expectation, on top of which the gross margins declined sharply by 5% quarter on quarter. Thus, EBITDA margins came at 6.5% against expectation of 8.5%. And mind you, this was a good season from revenue perspective. And although summer season has been very good for ACs overall, and quarter one is also expected to be good for top line, the pressure on raw material cost will continue season. So that is the reason that we recommend to avoid from near-term perspective. Bandhan Bank result was above expectation. Provision came at almost nil compared to expectation of 850 crores. Gross NPS declined sharply to 6.5% from 10.8%. Similarly, net NPA also declined to 1.7% now from 3%. We think bank is again headed to 3% plus ROA from current year itself, which was the case before COVID, and overall we are positive on Bandhan Bank. SBI result was in line with expectation. Operating result was weak because of higher growth in OPEX. However, asset quality continues to improve with every quarter. Net slippages remained low, in line with quarter three at just 0.5%. Net NPA has now declined to 1% mark from 1.3% in December. Restructured book also has come down from 1.3 to 1.1. And loan growth has also picked up from single digit couple of quarters back to now 12%. And management from commentary it sounded that it can still head higher. So we are positive on SBI. There were other three PSU bank results, all of which were below expectation. Bank of Baroda, UCO Bank and Union Bank of India. And in all of them, the credit cost as well as the slippages deteriorated quarter on quarter. So we recommend to avoid all the three banks. Poonawalla FinCorp result I had already discussed on Friday, but the con call that happened on Friday was positive. As per their guidance, loan book should grow at 30% CAGR. They are also planning to sell stake in their affordable housing finance company and then list it separately via an IPO. And this process will create value for the shareholders of Poonawalla FinCorp. Asset quality is now well under control with net NPA of just 1.1%, which is, we can say, almost best in class in terms of vehicle financing NBFCs, and expect a strong profit growth for the company going forward. We are positive. Thank you.
Good morning, everyone. Vinati Organics announced their results on Saturday, and results have improved after a quite a lot time. The sales grew by 74%, and EBITDA margins have also improved on Q and Q basis, though still it is low than the last year. But we believe this is still an improvement, that the management has started showing some improvement in the margin, at least on the sequential basis. Though the stock continues to remain expensive and trading around 53 times TTM EPS, but we believe this is a positive from today's trade point of view. Avenue Supermarts, that is the DMart announced their results. Though the results looks below expectation, but because we know, because this is because of the Omicron effect which happened in January. Even in the commentary, the management has said that the March month was very positive, and they have seen very strong growth in March and expect that to continue in going forward. Also, with the high inflation rates and high inflation in the economy, this augurs well for the players like DMart, which offers a very value buying to the customers. So this is positive from today's trade. Though on the results per view, this looks below expectations. Linde India, that's a chemical company, announced their results. They're into industrial gases. The results is declining because of the margins have come down to 20% versus 30% last year. Sharda Cropchem announced their results, and this is their main peaks quarter. The results were above expectations. Sales all grew by 32%, and even the EBITDA margins have come better than the expectations. The stock is trading 15.7 times, and we believe this is positive from today's trade. Gujarat Fluoro announced their results, and results have improved and were above expectations, mainly because the company is able to report good margins, which is 31% versus 23% last year. Imami announced their results, and results were ahead of expectations. The stock is trading 25 times 23 EPS, which is much below than the other FMCG. So we believe that this ahead of our expectation result should augur well for them, because we have seen that this quarter till now the FMCG's company is not able to post good results. So this is an outliner in that, and we believe this is a positive for them. Alchem Laboratories announced the results, and results were below expectations, mainly because of the EBITDA margins which came below expectation. The stock is trading 18 times FY23, which is not very expensive. However, we can see muted growth in near term because of these results. Thank you.
Yeah, good morning. Adani Group has acquired wholesale stake in Ambuja Cement and ACC Cement at $10.5 billion. Wholesome, through its subsidiaries, hold 63% in Ambuja Cement and 54.5% in ACC, out of which 50% is held through Ambuja Cement. The combined installed capacity is 66%. Post this acquisition, Adani Group will become the second largest cement producer in India with a capacity of 70 million ton. The open offer price for Ambuja Cement will be rupees 385 per share, and for ACC it will be at rupees 2300 per share, which is at an upside of 7% and 9% respectively. Valuation of this stake comes at EV per ton of $163. That is a combined EV per ton. This EV per ton is this stake is the highest for any other cement deal since 2016. We are positive on both the companies. On result front, APL Apollo Tubes result was below expectation. Sales volume came at 552,000 ton versus 403,000 ton quarter on quarter. Realization per ton came at 74,000 versus 78,000 quarter on quarter. EBITDA per ton came at rupees 4,800 versus 5,000 sequentially. Share is trading at EV by EBITDA of 19 times FY23 EBITDA. Thank you.
Good morning. So Balakrishna Industries announced its results. The revenue was marginally below expectation. Revenue came in at 2,374 crore versus an expectation of 2,159 crore, which however grew by 16% on a sequential basis and 35% on a YOY basis. EBITDA margin came in lower at 21.2% versus an expectation of 24% and grew on a sequential basis from 22.3% and 31.4% YOY, primarily due to higher cost of raw materials, logistics, and power and fuel. This is partially offset by price hikes, with around 2 to 3% in the fourth quarter. The company expects demand momentum to continue across geographies and cements, mainly driven by pickup in economic activities, government spending on infra worldwide, and robust prices of commodities and agricultural commodities. The company is seeing good demand from mining as well as agricultural sectors in the OTR segment. Balakrishna Industries expects the current demand momentum to persist, and therefore volume guidance for FY23 stands at 3,20,000 to 3,30,000 metric tons versus 2,90,000 FY22, implying a volume growth of approximately 13 to 14% over FY22. The company is optimistic about growing ahead of the industry growth going forward and expects to gain market share in global markets. Currently, they have a market share of 4 to 5% in India's replacement segment. So we are positive on the stock. The stock is trading at a PE of 23.1 times FY23 EPS. Eicher Motor announced its results. The results were above expectation. Revenue came in at 3,193 crores, which grew by 11% on a sequential basis and 8.6% on a YOY basis, mainly led by increase in average selling price sequentially due to price hike and a better product mix. EBITDA margin came at 23.7% versus an expectation of 22.3% as against 20% on a QOQ basis and 21.6% on a YOY basis. The company took some price hikes in the fourth quarter and is expected to take another price hike in the first quarter of FY23, but still commodity costs remain uncovered. The continuing global shortage of semiconductor chips and the onset of COVID posed a challenge to the industry in Q4. The company also indicated that demand remains healthy in both domestic as well as export markets with a robust order book. The company has inquiry levels which are strong and new launches have been received well in the market with a waiting period of 2 to 3 months. The company has been focusing on exports and has significantly gained market share in various markets. Exports in FY22 were up by 110% over FY21. We are positive on the stock. The share is trading at a PE of 25.3 times FY23 EPS. Escorts Limited announced its results. The revenue was below expectation. Revenue came in at 1,879 crore versus an expectation of 1,834 crore, which grew by 5% on a sequential basis and 16% on a YOY basis. EBITDA margin came in at 12%, which was below an expectation of 14.7% and lower from 13.3% on a QOQ basis and 15.4% on a YOY basis. The management guides for a strong first half of FY23, for tractor growth for industry driven by higher market prices for wheat and other food grains. The company also sees multiple synergies between Kubota from higher end tractor, Kubota experience in rice focused light tractors and huge export opportunities. The share is trading at a PE of 17.9 times FY23 EPS. Thank you.
That's it from us. Have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.